Welcome to the new edition of the European ETF Market Trend for April 2016. During the month of April, flows were rather limited at 2.3 billion, compared to 4 billion in March and an average of 6 billion in 2015. Negative flows mainly concern equity ETF at 1.9 billion euro, and year-to-date the amount of outflows is equal to 5 billion. European equity ETF saw record outflows in April 2016 at minus 4 billion, and year-to-date the amount of outflows reached 6.4 billion on European equity, as investors are more and more doubting on the efficacy of the monetary policy and the inflation is still not picking up. Japan equity ETF also have seen significant outflows at minus 1 billion. Investors were disappointed by the no action of the Bank of Japan in April. On the opposite, emerging markets saw record inflows, supported by a more positive momentum on China and increased commodity prices. In a still uncertain environment, smart beta strategies continue to see sustained inflows, namely on defensive strategies like minimum volatility that saw sustained inflows at nearly 500 million euros. Opposite to equity, fixed income continued to see sustained inflows at nearly 4 billion after reaching 6 billion in March 2016. Alongside with the positive flows seen on emerging market equity, emerging market debt saw record inflows in April at 1.3 billion after 1 billion in March 2016. Investment-grade corporate bond flows continue to be sustained by the ECB action. Investment-grade corporate bond ETF flows reached 2.4 billion after a record high of 3.1 billion in March 2016. Finally, for fixed income, inflation-linked ETF continue to see sustained inflows at 532 million as inflation is starting to pick up in the US. Lately, a positive trend on commodity ETF has been noticed at nearly 200 million euros, supported by the higher commodity price increase. This level is a record high compared to the 3 previous years. Thank you for your attention, and I will be pleased to meet you again next month for the new European ETF market trends.